Hello and welcome to Macro Mondays powered by the Goxteen News Network. I'm your host, Landy, and today is July 28th, 2025. We're looking at Bitcoin to start today, and we always start with Bitcoin, right? But there is some big stuff going on, not just on the chart, but also this week. As it is the end of the month, we have a lot of economic data that's going to be coming out, and I do think you should be aware of it. Not necessarily that I think it's going to have that big of an effect on price action, although it might if there are some surprises. So let's go through it real quick here. We have JOLTS job openings coming out tomorrow. That's Tuesday. Wednesday, we have the Federal Reserve's press conference and rate decision, along with GDP growth quarter over quarter. Now, this is, of course, a metric that is continuing to be updated. And then we have on Thursday, spending month over month, personal income, and core PCE, so inflation metrics there. And then we have ISM, PMI, manufacturing, non-farm payroll, and unemployment. So all of this economic data coming in, of course, right near the end of the month, and of course on the first day of August, which is Friday. So there is a lot to be aware of that could affect the direction of markets. I really don't think that it's going to change macro structure at all. Most of the economic indicators coming into the end of the month have already been pretty positive in general. So the only real outlier of a surprise would be the market would be surprised if Chairman Powell did announce rate cuts. The market is expecting rates to stay the same. That is denoted in almost every forecast that you see. I know that you're seeing probably a lot of political posturing and a lot of takes online, but the market itself isn't expecting a cut. That would be a surprise and would likely create some volatility if they did do a cut. So me personally, I've been asked quite a few times, I don't think they do anything. Why would they? Why would Powell do a cut right now? The optics wouldn't look great for him in terms of capitulating to cutting. I think if anything, we see them priming for cuts that could potentially happen at the next meeting. That's my take on the situation right now. The economic data so far coming into these economic numbers that we're going to get this week has been looking good and been improving. Yes, there is some mixed stuff in there, but I think with a lot of the trade extensions and trade deals kind of being sorted out, I think that we'll start seeing those numbers start to turn in the direction that many would expect, and that would be the positive direction. Now, Bitcoin, there is something pretty big going on in this chart here. You might notice that these bands are very swooped up and over the top, and then we got this big expansion into this compression. We're getting a very clear look at the areas of interest that could get the next daily move going. Now, that doesn't mean that Bitcoin just can't go sideways, but we can start to lay out the outlook for the next bigger move and the areas of interest that move would really start to get going either to the downside or the upside here. Let's go ahead and turn on the local support and resistance zones of interest. And you can see that we have a few different things to pay attention to here. So we have the 20 simple moving average, which is the basis band of this Bollinger Band set that's helping us get these levels for volatility levels of interest. And in this case, you can see that if Bitcoin does start to close back above around the $120,000, it would be pushing the upper second standard deviation. Now, that doesn't mean much right now. And with the bands this contracted, what I would want to see for the bulls here, and this would be the condition for expansion, would be closes back above $121,000. That is where the upper third standard deviation of the Bollinger Band set is now. Now, that would be expansion back to the all-time high as the area of interest, right around 123. As many of you know, I'm looking to 125 as well. But 123 to 125, and then possibly another leg up out of this consolidation. If we did start to see closes above 123 to 125, then I'd be looking for expansion up to the 1414, somewhere around 128 to $130,000. Now to the downside, pretty clear. If we start breaking back down into the support side area here that we did go wick fishing last week, and that was last Friday. So we saw the wick down, and then the close back inside here. And we were looking for something like this. As long as the closes were coming in above 115,700, we were talking about this in this consolidation, right? Like we could see a shot down to the 115 area, maybe even lower. As long as it's closing back above 115,700, I'm not looking for too much more on that kind of a move. We got an intraday move down and then a move right back up to close in and around the $117,500 area. Now, if we did, though, start to see Bitcoin break down below 115,700, we would be below, this is for closes, mind you, we would be below the lower second standard deviation of the Bollinger Bands. Any closes outside of that, we'd be looking for expansion right into this low at 114,750 and likely continuation down to retest 112 to 109 as a larger zone of interest as the last weekly higher high on a closing basis prior to the highs that we have currently. Now, in this case, there is some daily areas of interest here as well, somewhere around the 110 to 110,500 area. We've got a few swings. We've got a few closes around 110 and even slightly below in the 109 and a half and above area. Realistically, that's where you'd want to see the bulls really start to pick up and show some strength in that area if we did see price get expansion into that support for a retest of the breakout. Now, in my opinion, the longer that the bulls go sideways here, the more likely I do believe it would be for the breakout to occur to the upside. And that's based on a few different things here. One, we have some bearish divergence off of this structure, but we don't have any bearish divergence within this uptrending structure here. Now we've got a little bit of a daily downtrend in RSI. Prices going sideways. You're going to see lower term time frame divergences that have led to more of this consolidation look. But if we do start to see closes back above, 117, 750, 760 area, you'll see that momentum would turn back to the upside in the context of being in like the mid zone of a regular stochastic momentum indicator while consolidating in a bullish setup. I wouldn't be looking for, as it stands right now, unless we see 115,700 break down, which we could, in theory, even see like swings down below the range and hit the range below and get bought right back up, right? That's not out of the ordinary for price action to do, but it's really about closes and a concerted effort to move price down and expand into the 112 to 109 area. That would only really occur, in my opinion, and start to become a possible outcome for price action resolving itself to the downside further here for a bigger correction, be on closes below 115,700. Of course, that then break down below that 114,750, right? That's where I'd be looking for the move to start targeting that 112 to 109 area. Otherwise, it's more bullish than bearish in this zone as it currently stands at this moment. And of course, I will update you on Wednesday as to my outlook on things there. Let's go ahead and take a look at the weekly. And this is the other reason why bulls want this to resolve itself to the upside here. And I just want to note before I take the local support and resistance zones of interest off the chart here, the upper first standard deviation on the weekly is now essentially right at the bottom side swing that we've seen so far. And there is no high here. Yes, there is a higher high to higher low swing. We don't have any kind of a closing high here yet. We just have some swing structure in place. Now this higher low swing is set, and any closes below it would paint the high now. This would be the area to paint the high in the weekly. So definitely, if we do see price starting to trade down towards that area, you want to see bulls pick it up and start, closing back above the 115,700 area and back inside this zone to prevent closes below there and locking in the high on a closing basis. Although, we could just see another swing. And because we just have a little bit of a swing structure, it's not very, very developed yet. It doesn't mean too much, but the upper first standard deviation is right there. So it would start to look more like the bulls would want to come and test this area down here. Now, what I will say is break out to the upside above the highs at 123 to 125. You see that upper second standard deviation. And in fact, if this candle turns green on the weekly, you will see that upper second standard deviation in line with our 1414 fib extension here at $128,000. Now, of course, if we did see a break above there, you can see that 39,000 is going to be a weekly target just overhead. That happens to be an area that is confluent. You're going to see this. It's going to look like a mess for a moment, but you're going to see that that's right around our 138 local fib extension here at the 1618 at $138,000 to $140,000. And you can see the local and macro fib extension at the 1414 perfectly matching there at $128,000 with the upper second coming into play there. I would still give it 128 to 130. If we start to see it closing above, though, next big area to go look at would be that 138 to 140, essentially where that upper third is. And, come back to it later. Price could, then start to work its way up towards, 150, 148, $150,000 up there. But as it stands right now, the criteria is very clear. This is just a consolidation. Now, there has been the argument that I've seen and heard from many that, it's just too long sideways here. The move is slowing down. It's not going to go anywhere. And granted, there was a catalyst. We did see the price went sideways for a couple weeks before lifting off. Now, this was right around the election here in the United States, and obviously the more pro crypto candidate won. Yeah. So, but it was still indicating as though even prior to the election that it wanted to test and break out above here. So I'm not too concerned about the sideways here. I know that some are. Me personally, I'm not. Maybe I'd get stung by that. I mean, I can't get stung by it. I'm positioned really well, but I hope that my analysis and outlook on that isn't stung by that. We'll see, right? We'll see if I'm right or wrong on that. That's just a hunch, right? And realistically, it's conditional. If we're seeing price on the weekly, and of course that being, we can watch those daily closes as they come in, stay above this swing low here at 114,750 and kind of hanging in the zone here on the weekly, then it's fine. It's more likely to resolve to the upside, maybe even, start to turn, our stock momentum indicator. And then, realistically, even locally here, start trading back and closing candles above 120. If we haven't hit 121 and started to close above it, we're very highly likely going to hit it. And then we look for closes above that. That'd be daily expansion into the highs. And realistically, you just need to see higher highs, obviously. And I'd be looking around that 123 to 125, and then closes above 123 are going to indicate that we're very highly likely on the next, expansion to compression to re-expansion up, targeting that 128 to 130. That would look pretty good. We'll see if that happens. Otherwise, and we start looking to that downside for some liquidity. And I'm going to say, bears don't have too much cover up here, so they've got to be careful taking shorts in these areas. But we are in and around some major economic events. So if intraday candles start to swing hard, just look for the closes. Right. And if the closes meet the criteria for further downside or further upside, that's what they meet. And we'll either see it in the lower term timeframes or we'll get that continuation on the dailies. So that's kind of where I'm at on that. Let's go ahead and check on Bitcoin dominance. I think it did get a little bit of a bounce. This could potentially set a low here. It's got a little bit more to go, about 61.5%. I know that some indicators might be, they're not calling it a low yet. Good. But just be aware that if it does bounce, it's probably going to head somewhere around the 62.5%. It's really, if it gets above that, that's where the basis band is on the daily. And we'll check in, of course, on Wednesday, but that's where, look for it to potentially go further up to 63.5, 64%. And if it recovers this yellow line up here, then it's right back to the highs. And realistically, that could happen in either scenario. More likely going to see, dominance tick up if Bitcoin goes down, but that's not always the case. You got to watch Ethereum. How well does Ethereum hold up? And Ethereum's been doing pretty good. Let's check on Ethereum. We hit our overhead resistance here at 39.30. And still closing above this 36.35 to basically 37.50, preserving the chance that we could still see Ethereum tagging into this zone around $4,000. You want to see, this is nice higher low structure right now. Conditions down to that 3,500. Bulls want to see that hold up. Otherwise, we're looking kind of to the daily area. There is a little bit of a pit stop. It could swing down to the 786 here around the high 3,300 to 3,400 area. But realistically, we start closing below 3,500. It's going to look like it wants to target around 3,000 to 3,200. That would be kind of the next big area. But for right now, it's more biased as long as it's trading above this 3,650 or so. It's more biased to keep testing around $3,900 to $4,000 and potentially even up to that 4,150 and above. It's not until we see closes above that 4,400 would I be really excited about Ethereum's price action right now. Because what I'm looking for is, after this big expansion, I'm looking for some consolidation. That would be healthy, is to get some consolidation at the minimum. And, if we do see a larger correction, even if we saw a larger correction in price action, I don't think that it'd be bearish, in my opinion. And I've shown that because of the weekly here. The weekly is in, higher low, higher high structure. We have the confirmation of a trend reversal. And realistically, the area to hold, the last higher low is all the way down here at 2,300 to 2,100. And it's that 2,900 to 3K level that you want to see hold up. And what I want you to notice here is the upper first on the weekly is right here at right around 3,150. So 3K to 3,200, fair game if it does start to break down from 35. And you'll note that that is right where the daily upper first is. Now, of course, this is going to update more aggressively after each closure every day. But it is pretty interesting that we are seeing that confluence right here, right now. But what we're seeing is what we wanted to see. It's kind of a sideways and up consolidation in and around the upper first standard deviation for Ethereum. That's good. Moving from expansion into compression as price kind of slows down its velocity in terms of its dispersion of returns to the upside here. And nothing too crazy. Just be aware of bearish divergence. That would be just one drive. It's more corrective than not. If we do see a high put in here, we're very highly likely going to see bearish divergence. And, unless it wants to really pick itself up, where would it avoid it to be? It's be kind of crazy. That's a pretty high read there. So we're going to get bearish divergence off of this read, but let's go ahead and take a look at it real quick. It would need to get above 88. So let's actually look at what 88 would be. And shout out to Caretaker. I think this is a Caretaker indicator. It is a paid indicator, by the way, but there's lots of free ones that have stuff like this. Let's raise the critical level to an 88 and just see what that number would be. Yeah, so this would have to be closing around 47.16, so right around the all-time high to not throw a drive of bearish divergence. So it's more likely from here, based on the look that we have, that we would see some bearish divergence develop locally, but that's corrective. I wouldn't be looking for anything too crazy, and then come back to it later. So consolidation is what you want to see around this area. And if it just wants to hug the upper first and keep going for it, sure, great. Just watch that bearish divergence for a larger correction coming soon or something. If it keeps wanting to reach for the overhead resistance here, but consolidation would be preferred here, and then let it see how it resolves later, kind of thing. Solana, I'm curious about. Yeah, so Solana's got a higher low, lower high. Just beware of the low here at 175, and on any breaks below 180 in the basis band, that 175 is in play and probably in for a larger correction down to this 160 to 166, 167 area by the lower first. That would be kind of the main area to look for. Need to see closes back above 190 to test that lower high at 195, and then it's right back to the high, somewhere around 200 to 210. The bulls need to recover and close above there. That's really what needs to happen. And I did check on Sui, I believe, on Friday, and this is another one that a little bit of a daily downtrend. Nice move up above that 430 level. You see the expansion into compression. I want to see some consolidation, and bulls just want to see this last low on a swing hold at 351 with the close caution below this close at 371. And, nothing too crazy here. Did we get a structure break on the weekly for SUI? We did, higher highs. So we do have a confirmation. And on the weekly, the last higher low to hold is 245 to the swing low at 230. So we had the trend reversal set up, lower high broken ever so slightly, but even if we get a correction here, go sideways, that's preferred for the bulls here. And I believe it might be the same for Solana, or did the bears push back? Nope, we got the, let's go ahead and look. Yeah, ever so slightly. We got the trend breaking close here. So just need to hold that weekly at 131 to 125 down there. But, bulls need to see continuation from here. Consolidation is fine, but want to see continuation from here without too much of a correction. It still would be safe around the 165 to 160 level, maybe even deeper towards that basis. But, you want to see some strength here, especially if alt season is the thing, a full-blown alt season, not just a mini one, is going to be the thing. That's what you want to see, is consolidation go sideways even if Bitcoin corrects, and hold up well if Bitcoin starts to break out to the upside, and try to run with it on its US dollar pair and maybe its Bitcoin pair trying to outperform. And that's where we can just look at dominance and see how it does. And that would be a good indicator of whether or not we're entering a full-blown alt season or if this is just another mini. And that's going to be it for me today. We'll check in on all this. I don't want to do that. Thank you. We're going to check in on all of this on Wednesday and release. Thank you. Keep hitting the button. I wasn't doing it. We'll check in, of course, on all of this on Wednesday. And you can find me on various stages. And if you're really interested and you'd like to ask me about what I think price action is in between now and Wednesday, that being Tuesday, you're more than welcome to. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care. Why did that get? Oh, that's why. Bye.